Hi, I'm Russ Mayfield, investment strategy analyst at Baird, and we are back for another weekly update with our friends at Strategas. Today, I'm thrilled to be joined by Strategas Washington research analyst and director, Jeannette Lowe, to talk all things debt ceiling. Jeannette, how are you doing today?
I'm great, Ross. How are you?
I'm doing really well. Thrilled to have you on. I know, the debt ceiling issue may be a while from resolution, but we're starting to get questions. It's starting to be picked up in news coverage. And so I'm glad to talk to you today. I wanted to just start with kind of a high level primer of what is the debt ceiling and why do we find ourselves in the position we are today before we get into kind of the market implications.
Sure. So the debt limit is technically a statutory limitation on how much the U.S. Treasury can borrow to fund federal operations. And so this is set by Congress. We do it at various intervals. And so currently the most recent debt limit is 31.4 trillion. We actually hit that last week. And so now the U.S. Treasury is employing what is known as extraordinary measures to keep the government functioning and to still have enough money to pay all of its bills and pay interest until we actually hit what would be called the X date. And that is when the US government would not be able to pay all of its obligations on time.
So you mentioned that the U.S. is already, employing extraordinary measures. What are some key dates or key items to watch as we move forward? Because I know this debate and process could really take months from here. So it's being covered now, but this could be kind of a lengthy process. Am I right?
That's correct. So the U.S. Treasury Secretary has said that they have enough extraordinary measures that she believes we will not officially hit the debt ceiling until at least early June. And so we are starting this process now. We're starting to get some of the debate happening, but it's not really going to ramp up until, say, after April 15th, looking at May. We also need to find out what's going to happen with that X date. So it could move up, it could be July, it could move into June. So we just have to kind of watch what's happening within the US economy and, spending and revenues and what happens there that could move that X date a little bit. So we would anticipate that the debate really starts to pick up in April, May, June, maybe July. That's when you actually could have the actual debt ceiling real fight as we really approach that X date, which we're now anticipating probably June or July.
Okay. And so with that kind of lengthy timeline to keep an eye on, this question is probably a bit unfair, but at this point, how do you all expect this to play out? And what do you expect the ultimate, result or resolution of this fight to be by the time we get to that point in June, July, August?
Right. So right now you have the House Republicans who have come into office. They are calling for spending cuts in exchange for their votes to lift the debt ceiling. The White House, on the other hand, is saying that it is not currently going to negotiate on the debt ceiling. So this is where we're starting. But again, as you mentioned, we have a couple months to go in this debate. And so there's some time for this to play out. What needs to happen is there needs to be an actual position, an actual text that we need to see, kind of figure out where these negotiations are going to move forward. So for instance, one of the things that we really like to say that you need to watch out for is what does the House pass in terms of legislation on this? So the House, if it wants to maintain this position of having spending cuts, it needs to reject a bill that would be a clean debt ceiling increase. So that way it's saying that it has enough members who don't want to have no negotiations. And then it also needs to pass legislation saying what it would do. So for instance, the current plan is to have spending levels, we're in fiscal 2023. They want to go back to fiscal 2022 levels. And we just had a big increase in the budget that was passed in December, a 10% increase in defense spending, more modest increases in non-defense spending. So they need to pass something that would say, we're willing to put forward, let's say $100 billion of spending cuts and actually have that pass the House. If it can pass the House, then that sets up the Republicans' negotiating position with the White House to try to actually get these spending cuts. Now, ultimately, there's a lot of time here to go through to figure out what the actual result will be. The spending cuts that they're currently calling for are quite large. We also anticipate that defense spending would not be cut, just given what we have going on with the war in Ukraine and other geopolitical issues. So if you were to put all of those spending cuts in place on the non-defense side, it would be pretty politically untenable. And so we think that negotiation needs to happen. They probably need to come up with either smaller cuts or something else. Spending cuts are not the only solution here. So there also could be fiscal reforms. There could be the promise of fiscal reforms. There could be other legislation that gets added to the debt ceiling to actually get it across the finish line. But ultimately, what we're thinking is that this might go down to the wire again, just like we've seen in the past. That usually is what happens with Congress. They like to act just before a deadline. So that's going to create some volatility in the market as we go through this debate. Our view, though, is that the U.S. is unlikely to default. We have a lot of members who were there during the 2011 debt ceiling fight, and they do not want to play with the full faith and credit of the United States. So we think that if we get down to the wire, there is a solution that probably the moderate members in both parties will reach to come together to avoid a default. But we just have a lot of time before we figure out what that ultimate resolution will be.
Right, absolutely. And I've seen you all say before that the market volatility, it can often act as a catalyst to bring people to the table as it starts to affect people in the real world. Well, and with that, with that timeline, we'll definitely hope to talk to you again. Before then, as things develop, we know there's a lot to keep an eye on. And so we appreciate your insight today. And again, hopefully talk again soon before all this is said and done. So Jeannette, thank you so much.
Thank you, Ross.